Hey, having sold hundreds of properties and earned numerous awards throughout the course of his career, Gabe Cole has more than earned his reputation as one of Orange County's most skilled and trusted real estate professionals. Gabe launched his career in 2002 and quickly established himself as a rising star, winning Rookie of the Year award his first year in business, and the First Team Hall of Fame award in 2010. His following of local clientele is a testament to the level of dedication he puts forth in every transaction he oversees. Hardworking, attentive to detail, incredibly savvy. That was his words. When it comes to financial aspects of buying and selling a home, Gabe gives clients competitive edge when it comes to accomplishing their goals in the best and most lucrative manner. A graduate of USC's Marshall School of Business with an emphasis in real estate, finance, and development, Gabe is a licensed real estate broker as well as experienced real estate investor. Whether clients aim to purchase the new home of their dreams, sell a property for its maximum value, or invest in the future, his market expertise, proven foresight, and meticulous planning strategy ensures a successful endeavor each and every time. What's more, Gabe is committed to delivering the highest level of outstanding personal service to each buyer and seller he represents. Gabe lives in Newport Beach with his wife, Shawnee, and their three wonderful children, Eva, Grayson, and Finley. Please join me in welcoming Gabe Cole.
Thank you, Michael. Thank you, everyone. You know, honestly, listening to Michael introduce me, I feel like I'm going on American Idol or something, right? Or at least a radio show. That's great. So thank you for that. I wanted to talk to you guys a little bit today about two different investment strategies that I'm using right now with some of my clients that are benefiting in today's market. Strategies can appeal to different people, so that's why I wanted to share both with you. The two different strategies are the long-term hold, buying real estate, obviously renting it out, having your tenant pay down your mortgage, and just holding that property for the long term. Don't even think about selling it. Have the tenant in there. If you don't want to property manage it yourself, you can hire a property manager, but really the goal there is have your tenant pay off your mortgage. 30 years from now, you own it free and clear, and maybe you have accumulated several of them over the years, and you have a nice positive cash flow coming in every month where you don't have to worry about, you know, that paycheck coming in. So that's the first one. The next one is a short-term, basically buy and flip model. And that would be for people that are interested in profiting in today's distressed real estate market, where we are purchasing foreclosures at under market value, fixing them up, making them look very nice, and then selling them for top market dollar today. So those are the two strategies we're gonna dive into. Who's heard this one before? More millionaires were made during the Great Depression than any other time in American history. Yeah. Have you guys heard that one before? I actually looked it up and it's true. I verified that before I said it. Why is that? Because during times of economic crisis, there are opportunities to be had. Thankfully, we're not in the midst of another Great Depression, but I do see our current economic climate as an opportunity for the people who, with the willingness and the ability to take action, whatever that might be, whatever the opportunity they choose to, but it requires taking action. And a lot of people, I even read in, I think it was Fortune magazine, they did a study, and by the year 2020, it was like the number of millionaires by 2020 is going to double from where they are today. So obviously they're seeing the same thing. Who wishes they bought more investment property in 1995 or the mid-90s? And if you did buy, who wishes they bought more, right? I was in high school at that time. I wish I bought some, but I don't think that would have been possible. Who's heard of John Paulson? If you haven't heard of John Paulson, I know Steve, of course, has heard of John Paulson. He's huge in the financial industry. He's number 39 on the Forbes billionaire list. The guy is worth about $16 billion. 2007 alone, he made $3.5 billion by predicting the housing crash. If someone were $16 billion and he makes that money based on predicting market conditions and what's going to happen, I know I would want to listen. I have a quote here that I found from him. He says, if you don't own a home, buy one. If you own one home, buy another. If you own two homes, buy a third. and lend your relatives money to buy a home. This was just recently, a couple of months ago, that he's saying that. This is not someone that's always been bullish on real estate. He predicted the collapse of the subprime market. Why do people not feel like they can invest in real estate? Number one thing that I hear from prospective customers or clients is that they don't think that they have enough money, or they don't think they can qualify, or they don't think they can afford to purchase property if they already maybe own one of their own. There's a program that I want to talk to you guys about today that is enabling not only first-time home buyers to purchase with 3% down, but also investors to purchase homes with 10% down. It used to be 25% minimum down payment to buy an investment property. The program is by Fannie Mae, and it's called their HomePath program. Their HomePath program allows an investor for a non-owner occupied property to purchase a home with 10% down. And with where today's prices are, this makes so much sense, especially for Orange County. It used to be that you would have to put like 35, maybe even 40% down if you were buying at the peak of the market, because prices were so high and rents were nowhere near that in order to get a break even. Today, and I've got 3 properties here on the first handout, if you see the one with the three properties here, I've picked out 3 properties that qualify for this program. And it only can be Fannie Mae, what they call REOs, Fannie Mae bank-owned properties. That qualify for this 10% down loan program. So I've got a couple of different run-throughs of some properties. I've got one in Rancho Santa Margarita. You know, the first thing that I said, people don't think they may not have enough money to purchase an investment property. 2-bedroom, 2-bath condo. Rancho Santa Margarita is a little further inland from us. Beautiful community. $174,900 available on the market today for someone to purchase. I did a rent analysis on this property and reviewed some rental comps. And that property would quite easily rent for $1,500 a month. If you take your total payment, taxes, insurance, association dues, and principal and interest payment, you're looking at about $1,350 a month with 10% down. So you can do a positive cash flow of $150 a month with roughly $20,000 out of pocket when you put in your down payment and closing costs. I've got 2 others here, one in San Juan Capistrano that's actually a 3-bedroom, $198,000, and one in Huntington Beach that's a 3-bedroom for $189,000. There's more of these properties out there. So if you or someone you know is considering maybe diversifying their portfolio a little bit, buying an investment property where they can keep it, never sell it, and then just have cash coming in when it's all paid off, I think this is a great opportunity. If you can't come up with the money, let's say you don't have the $20,000 down, but maybe you've got a friend that wants to go in on it with you. Maybe a family member, mom, dad, brother, sister, whatever it is, someone you know and trust and would want to own a property with. I think this is a great opportunity in today's market. I don't know how long it'll be around for. Obviously, when the REOs start to diminish, they may do away with some of these programs. So I would recommend capitalizing on it while it's around. The next thing that I want to talk about is the next sheet that you have, and it's more of a short-term buy and flip model. Here is we're purchasing properties roughly about 20% below market value. And a lot of people don't know how to do that. I'm going to share with you how we do come across those properties. These homes are not on the MLS. The MLS is homes that are listed by other realtors. They put them on the market. Those properties, you're competing with every other buyer who wants to buy a home for their primary residence and any other investor that would just want to purchase property. The competition out there for properties that are under market value is incredible. And they're called the trustee sale auctions. And basically what that is when a property is in foreclosure and the bank is going to finalize the foreclosure process, it actually goes to the county courthouse. Bidders with cash in their pocket or cashier's checks are able to purchase this property. Because you're cutting out every other person that needs to get a loan on a property or people that are buying for themselves to live in, obviously you're only competing with mainly other investors. So that's why we're able to pick up margins on these properties that are substantially greater than picking up a property at in the MLS. Because of that, obviously it's a higher barriers of entry. So what I'm doing with certain investors, if you've got $500,000 or $1 million and above, which if you know of anyone that does, I would love to speak with them and sit down and share in more detail how this program works. We could set up an LLC with just their money. If people don't have that kind of funds available, and they may want to maybe pool their funds with friends, family, relatives. Maybe, one person's got 50, another person's got 200, another person's got 150. If we could pull those together in an LLC, we could then go purchase these properties and turn it around and flip them. So I just show you a couple of before and after pictures. I've done about 20 of these. So my experience and track record is there. I have not lost money on one of the ones that I've done, so I've made a profit on every single one. You don't have to worry about the headaches that come with this. It's basically we're handling everything from them. The due diligence of the properties, the title research, if we have to do an eviction, we handle that. The cleaning, the rehab, the marketing of the property and selling it, we handle all of that. So it is a passive investment for the investor. If they want to come in and check on the property to see what they're actually buying, by all means, they're free to do that. The gist of how that would work, this is one in Laguna Hills we bought. Shows a cost basis of $246,000. We ended up selling it for $329,000. Put in a new kitchen, new flooring, new paint, new carpet. That's just kind of an idea of what we do on these things. So that is kind of a rundown on two of the different investment opportunities that we have. I have a testimonial with me on one of my clients that I'm doing this right now that I just wanted to read. I told him I was going to be coming up here, and he shot me over an email. I have known Gabe Cole as a close personal friend for several years, and about 12 months ago, Gabe shared with me an opportunity to invest in foreclosure auctions in order to sell them for a profit. I trust Gabe like I would my own brother, and I knew he's not only capable of following through with an execution strategy, but with his skill and expertise in the real estate market, I knew it would be a positive venture. To be honest, I didn't know I would have turned out as good as it did. Gabe has acquired and sold 6 properties for me over the last 12 months, which provided me over $100,000 in profit. I can't thank Gabe enough for his hard work, diligence, and care in investing my money, and I look forward to more successful deals to come. So at this time, I would like to open it up. If you have any questions, I'd be happy to take them. Yeah, Brandon?
The 3% is the rate for owner-occupied?
For the Fannie Mae Home Path program, yes. Okay. And one other thing to share with you, if you've heard of mortgage insurance, if you go and get an FHA loan, there's mortgage insurance, which adds a little bit over 1% onto your monthly payment. These Fannie Mae loans are without mortgage insurance. So you can buy 3% instead of 3.5% for FHA, 3% on Home Path, or 10% for an investor loan.
And this includes the HOAs?
What I did was, these calculations that I did included the HOAs. I even put some in there for insurance, taxes as well. Yeah. Paul?
Okay, what do you share with people who want to get into the flip market about their apprehension with, on one side of the coin, you're getting a good deal, right, to purchase the property, but they're a little apprehensive because they might not be able to sell it. They might get stuck with it all the time. So
great question.
what are the average days on market right now for situations like that?
So part of our strategy is to try to get out of these properties as quickly as possible. We don't try to pinch every last penny out of the property in hopes that we can get, $5,000 or $10,000 more and have it sit on the market for 90 days. Because time is money in this, and the more properties that we can turn in a year is the greater return to the investor. So really the strategy is we make them look, in whatever price range we're looking in, we make them look one of the nicest homes that are available on the market. If you've been looking out there and you see short sales and REOs, especially in the 500 and below range, they don't show very well at all. So we come in and first make them appeal to the masses by giving everyone the new paint, the new carpet, the nice granite countertops, nice stainless steel appliances, and then we price them competitively. So the majority of my transactions have been total hold time of less than 90 days. Less than 90 days from when we purchase it to through rehab, getting it on the market, and selling it. So days on market is probably less than 45. Total hold time is about average of 90.
How do you coach clients who have too high of expectations for their return?
I don't want to promise the sky and fall short of expectations, so I let them know that any investment, there's risk involved. And I will show you my track record of what I've earned on each transaction that I've done. Markets can change, things can fluctuate. Can that number change a little bit? Yeah. If someone wants, 30 or 40, I'm going to say, we're probably not going to be able to get that. But if you're going to be happy with somewhere in the 18 to 20% in a year on your money, which is incredible, right, Glenn? Right, Steve? In today's market?
Money markets are paying a lot too.
Yeah. Right. Or CDs, right? CDs, 1%, 1.5% if you get a longer term CD. So, I mean, I think people would be very pleased and happy with this, and we set the expectation up front. Any other questions? No? Great. Thank you, everyone.